The second quarter figures for the UK should be better, and growth has picked up. Andrew Kenningham, Capital Economics. The US Fed interest rate will be released on Wednesday. Will we see it move higher, or will they leave it on hold?
Well, it's very unlikely that they'll make any change in the interest rate this week. The Fed prefers to change rates on the occasions when they revise their forecast and when Janet Yellen has a press conference. And the next time that will happen is in September. But even then, I think it's more likely that they leave rates on hold because inflation has been a bit lower than expected over the past few months. So our expectation is that the next rate hike will be in December and that the Fed will then raise rates 4 times over the course of next year.
The IMF will not rely on the US and UK for global growth after the soft Q1. Is the UK economy performing weaker than expected?
The revision to the IMF's forecast for both the US and the UK is largely a question of catching up with the numbers that were released for Q1. Which, as you said, were. But the second quarter figures for the UK should be rather better. They will be publishing for second quarter GDP data later this week. And it seems that consumption growth has picked up a bit in the second quarter, and export investment has held up reasonably well too. So overall for the year, growth will be a little bit weaker than originally expected. But it won't be, we're not looking at a major slowdown.
The UK will hold talks with the US for a post-Brexit trade deal. Will this make the EU exit less painful for Britain?
These talks about a potential trade agreement between the UK and the US are going to be at a very preliminary stage, and the process will be slow. Apart from anything else, the UK will not be permitted to conclude a trade agreement with the US until it's left the European Union and left the customs union. That might be several years away. And even then, progress in the talks may be quite slow because typically these things take many years. And the EU-US trade agreement or trade between the EU and the US is already very free. So I don't expect it to be dramatically liberalized relative to where we are now. So the short answer is no, I don't think this is going to be a major factor.
Well, thank you, Andrew Kenningham, for speaking with me today from Capital Economics, and thank you at home for clicking back.